تست 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 تست. الو. Assalamu alaikum. Good evening. Finally, we can start. This is Ramzi Reyes. Quickly about myself, I graduated from American University of Beirut as computer engineering. I worked in the United States of America in Boston, Massachusetts for 5 years. And then I came back to Lebanon and I started working at FU till today. So today I'm heading the products department. And let's start. So we're going to talk about tokenization. It's a very interesting topic. So we're going to go through all of these. Believe me, we're going to go very fast. So FU, just 1 minute about FU. It's a B2B fintech company. We focus on servicing banks, fintechs, retailers, and other service providers. We're focused on 4 main departments, if you want. Product delivery. We also do professional services. We have our own software which provide software as a service, and we also do consultancy. I'm going to go all of this. So you can see we have a variety of clients all over the GCC area. And geographically, we're kind of everywhere here. And we have strategic partnerships. I know I'm going too fast, so that we go into the nitty-gritty. So we have a lot of products, as you can see here, and our main focus today will be on tokenization. So to talk about tokenization, which is basically about cards, you know, I'm going to go over a bit what are cards, the different elements of the cards, so that you can understand a bit more about tokenization. So cards, you've heard a lot about credit cards, prepaid cards, debit cards. So quickly, what is the difference? Debit card usually is linked to a bank account. You can do payments, you can do card cash out withdrawals. Credit cards, you have a limit, and it's like a loan, and you can pay up to that limit. And once you reach that limit, or if you haven't, after a month, you have to kind of pay back. Prepaid cards, you need to fund them first so that you can use it. Who provide those cards? Usually you hear about schemes or payment networks. If you take any of your cards today, probably you're going to see a Visa logo or a MasterCard logo. This is very common here in this region. In other, of course, Mara as well. In other regions, you might hear about or know about American Express, JCB, it's a Japanese, Union Pay, Chinese, Discover, United States. What are the card elements? So Of course, they come in different colors, different fonts. Basically, there's the, okay, it doesn't show. So there's the chip. This is, which comes like, it's a hardware. It has a lot of encrypted information inside it. There's the card number, which we're gonna discuss a bit more about it. How can the card number tell us a lot about the card? There's the validity. You can see your name on the card. There's the payment network, which we discussed before. And recently, you've been seeing a lot of this, which is NFC or contactless, meaning that instead of the older chip and pin, so you used to take your card, they put it in the point of sale, and you enter the pin to make a payment. Now you can tap. Even before the chip and pin, there used to be only the magnetic strip. So they used to kind of move the card up and down, and the information was saved inside this magnetic strip. There's the signature, and there's the hologram for authenticity. And of course, there's the CVV. So the key points about the chip is that by adding this chip, you increase the security. Usually with magnet here, magnetic strip, the information can easily be hacked. With the hardware, and the information is inside the chip, now it's more secure. Because data inside it are encrypted, is encrypted. There's a dynamic authentication. So on every new payment, a unique code is generated. So that if this unique code is used, you cannot use it again. The chip and pin we talked about, and the contactless. If I'm moving too fast, just please let me know if you have any questions. I'm not sure if you've heard about moving from a 6-digit BIN to an 8-digit BIN. BIN is bank identification number. So usually, if you have, for example, more than one card from the same bank, a lot of the first 8 or 9 digits are going to be the same. And then what's going to be different is the account number. This is, each bank will have kind of the same BIN. And the last digit is the checksum. So the checksum is based on some kind of algorithm. It's called LUN. It kind of calculates and makes sure that the card number is correct. And this is mainly used when you're paying online, so that you don't put the wrong digit by mistake. The card number is also known as PAN, personal account number. So you will see, or you will hear a lot about the PAN. All cards are usually 16 digits from all schemes, except one scheme, which is the Amex, American Express, is 15 digit. The first digit always tells or identifies the scheme or the payment network. So if it starts with 4, that is a Visa card. So this is a Visa card I'm showing, even though I'm hiding here the payment network. If it's a 5, it's a MasterCard card. So if you now take your card, it's probably either starts with a 4 or with a 5. So 3 is JCB, 6 is Discover, and others. Okay, so we talked about the card. Everybody has a card. You've probably used the card a lot, right? You went to a merchant, you bought something, and you paid. So how does it happen? Where does the transaction go? So you're the card holder. You go to a merchant. You tap on a point of sale, on a terminal, POS. This POS, this transaction, is connected, obviously. It goes the transaction to an acquirer, so, or an acquiring bank. So a merchant cannot operate without an acquiring bank. Once this transaction goes to the acquirer, based on the BIN range, the acquirer routes that transaction. If it starts with 4, it routes it to Visa network. If it starts with 5, it routes it to MasterCard network. So the transaction is routed to the, so basically it's not just the credit card network, it's the card network, or the scheme, or the payment network. The payment network knows where to route this transaction because it has these, it knows for each bin to where, to which bank, to which issuer. So accordingly, it routes it to the issuer, which is your bank. Your bank checks, do you have balance if it's a debit card? Did you reach the limit if you have a credit card? Or do you have funds within your prepaid card if it's a prepaid card? If all goes well, it sends the approval or decline back to the payment network. The payment network routes it back to the acquirer, back to the merchant, and then you can see a success or fail. So this is a transaction flow and how actually the money goes. So let's say you're buying 100 Saudi riyal. Once this is completed, the merchant doesn't get 100 riyal. They might get 97 or 95. Where's the rest? The acquirer takes a cut. The payment network takes a cut. And even the issuing bank takes a cut. So this is how everybody makes money while you're doing the transaction. All right, so we talked about the cards. Now let's talk about tokenization, which is the real thing here. What is tokenization? You've heard it a lot of time. Tokenization is simply replacing the 16-digit number that you see on your card with another 16-digit number. This 16-digit number, if you look at it, it looks like a real PAN. You don't know it's a token. So if you're tokenizing with Visa, if you provide a Visa card, Visa number, Visa PAN, you will get another 16-digit number that starts with 4 because 4 is for Visa. If it's a MasterCard, it's a 5. So obviously here I mentioned something called token service provider. So I'm replacing this PAN with a 16-digit token, and only the TSP or the token service provider has the mapping. Nobody else has the mapping. And this is where part of the security starts. And the good thing about it, and we're going to discuss more about it, is that if this token is lost, your PAN is safe. Or if a token was stolen, you can stop it and your card is still safe. So, few facts about tokenization. It's supported on all types of cards, debit, prepaid, credit. If you have, if you've done this tokenization, you'll be able to do tap and pay. So contactless payment. It's as if it's your card, you tap. Now from your phone, you tap. The solution is available for Android devices using MadaPay, or iPhone devices using Apple Pay. In Saudi, this is the only option. In other markets, you have issuer wallets. So any bank can enable tokenization on their mobile banking apps, on their wallets, on Android devices. Because on Apple Pay or on iOS devices, Apple Pay has done some monopoly, and they only allow tokenization on their own Apple Pay wallet. Kind of like MadaPay is doing for here and here. And the nice thing about tokenization is that you don't need to have internet, Wi-Fi or 5G. You can even have on airplane mode. You just tap and pay. Although this comes with a, you can only do that for a limited period of time before you replenish. And we're going to talk about this later. Why we need tokenization? We're going to come to that. So again, this is about introduction to tokenization. So also you might hear about secure element or host card emulation, HCE. What is the difference? Secure element, which is the tokenization done on Apple Pay, the tokenization happens on a hardware device. So if you have an iPhone, it's hardware. There's a specific section within the device where physically tokenization is happening within that. So it's super secure. Host card emulation, this is what's being done with MetaPay. It's using the cloud or the software of your Android phone. This is where tokenization is being done. So it's reliant on the security of the device and of the application. This is why with HCE, you need to certify your application, because if you're not up to the security standard, there's a problem. Other fast facts, and this comes on why we want to do tokenization. Each token is unique. So if I have two mobile phones, one Android, one iPhone, I take the same PAN or the same card, I tokenize it on one device, and I tokenize it on another device, I get two different tokens. So each token is unique. And the reason behind this is that it's not transferable, and the token is bound to the device. So if a hacker somehow was able to retrieve that token or to know that token and try to use it on another device, it will not work. So the same PAN can have multiple tokens. So you can delete this token and you can create another one from the same device. If you reset your phone and you log in again, you won't have the tokens. You need to tokenize again. You can do management of that token. You can suspend, resume, delete. And the token is accompanied with a cryptographic key. We're going to talk more about this. Single use key, SUK, or limited use key. And as I said, if the token is deleted, you can still use the PAN. So if you summarize this, by tokenization, you're securing your original PAN so that if that token is compromised, your original card is still intact, because they're two different numbers. Nobody knows the relationship except the token service provider. So you're adding security. The merchants love this. The bin sponsors love this. Of course, it costs a little bit more money, but it's better for them from a security peace of mind. So we've talked a bit about the secure element, the host card emulation, the security that they've been adding. And there's the key. So in the chip, as I said, there's a unique code that is being generated with a key, and it's saved within the chip. So to mimic this security on the tokenization, two different schemes went with two different approaches. Visa went with the limited use key, or LUK. MasterCard with SUK. So as you might have, the name is tells about it. LUK, that is the same key that you can use it for a limited time. There are three aspects of it. Limited of use. So I can use this key 5 times, 10 times, 20 times. It's a configuration that is put that you can decide upon it. Not you as a user, but as a provider, like your bank. Duration. This key, even if it's not used, can be used for 10 days, 20 days, 30 days, 5 days. And the transaction volume. So I can pay up to 1,000 riyals with it. If any of these aspects are reached, you need to have a new key. And this is a process called replenishment. And this is an automated process that is provided by Meta and Apple Pay. And this is why replenishment requires internet. So this is why you can as long as the limited use key is valid on your device, you can use and pay without internet. But once any of these are hit or is hit, you need to be connected to the internet so that you replenish automatically so that you can use it again for other times. With MasterCard, for example, on the other hand, it's a single use key. As the name says, you can use it only once per transaction. So what I do is I save 5 keys, 6 keys, or 10 keys. If I have 10 keys, this is the configuration the bank has decided, then while I'm offline, I can do 10 transactions, wherever the amount is. If I do more, I need to be connected to the internet to replenish. The nice thing about it is that if you're always connected to the internet, or when you're connected to the internet, it replenishes by itself. So as a user experience, you don't notice anything. You just go and pay as if you have the card with you. So we talked about TSPs, token service providers. Obviously, there are many of them. Basically, most, if not all, schemes, payment providers provide them. But our focus today is Visa token service offered by Visa, VTS, MDES, or MasterCard Digital Enablement Service, and MADA tokenization platform. Visa and MasterCard are for international cards, which are prepaid credit cards. MADA for domestic use, which is the debit card. And we're going to discuss how this, it's not that it complicates things, but you have additional things to worry about. So you've heard about secure element wallets. So that's Apple Pay. You have third-party wallets, like MADA Pay. Third-party wallets mean it's not related to one bank or one issuer. You can add multiple cards from different banks in one app. So third-party wallets and secure elements are kind of the same. It's just which technology you're using, if it's a chip or cloud. Issuer wallets are like mobile banking apps. And merchant e-commerce. So you can still tokenize your cards on Netflix, on Amazon. So you put your card. It's not your card is saved, it's the token that gets saved, so that whenever you do another transaction, you don't have to enter the card details again. So the tokenization process, you have to think about it as 2 main steps. The first step is to provision the card, to tokenize it, and then to actually use it, the card transaction or the token transaction. So you have the wallet. Notice here, there's the Apple Wallet, Apple Pay wallet, and MADA Pay, because this is our focus today. You have something called Token Requester, Token Service Provider, TRTSP. If anybody has been in the implementation of tokenization, TRTSP is used a lot. It's the main component that has to be present. It is connected to the APIs of MDES, VTS, and the tokenization platform of MADA. So this is from the wallet side. From the issuing side, there's the ITSP, which is the issuer token service provider. The ITSP is also connected to VTS MDES and the tokenization platform of MADA, but from the issuing side. There's the ITSP gateway, which is kind of works closely with the ITSP, and the issuer, which by now we all know is the bank or the card processor or the card management system. It's basically where the card balance exists. So, okay. I'm not sure how many of you are aware, but in Saudi Arabia, if you're transacting or if you're using your debit card, the transaction doesn't go to Visa and MasterCard. It has to be routed internally as part of the regulation. So you've seen this screen, but it's different. The main components which is different is the national switch. So again, I go to a merchant, I want to buy. Instead of paying with a credit or a prepaid card, I'm paying with a debit card. Whether it's a token or it's a card. Let's start with the card. It goes to the acquirer. Acquirer is also called payment processor, so this did not change. The acquirer knows, based on the bin range of a debit card, it's a debit card and it's not a credit card, or it's not a prepaid. So I need to route it to MADA, to the national switch. So I route it locally. MADA is connected to all the banks, so it knows to which bank to send it. The bank, again, checks the balance, all is good, sends approval, no balance, they can reject it, or send decline, they send it back to MADA. MADA send it to the acquirer, and the acquirer to the merchant, and you see the result. So this is based on, or due to the local regulation. And I'm talking about this because it will affect how tokenization is happening on the device. So because of this, there's something called a dual token. Means there are two tokens saved for every card. And this is only applicable for debit cards. Why? Because debit cards, if I'm paying within Saudi Arabia, I need to route the transaction locally. If I'm abroad, the only way is to route it internationally. If it's a credit card, the transaction already goes internationally. It already goes to the payment scheme, so I will only have one token. So for the dual token, what's happening is, if it's a debit card, I'm sending to the token requester, TRTSP. It's tokenizing with MDES or VTS, depending on what? If the card is Visa or MasterCard. So VTS only tokenizes Visa cards, obviously. MDES for MasterCard cards. So the first transaction or the token happens, it gets saved on the wallet. And then the TRTSP, if it's a debit card, in the same process, sends to MADA Pay, please tokenize this debit card. So also with MADA, it goes to this flow and sends it back to the wallet, so that now the wallet has two tokens. During this flow, this could happen in a green flow, a yellow flow, or an orange flow. So as the green flow suggests, it's, you know, the green light, go, you don't think about it, everything's fine, everybody's happy, you know who the user is, you know that the card is for this user, so you pass along, you don't have any hurdles. Yellow flow means I don't know the user, or maybe I know the user, but I'm not sure if this is the card of that user. Maybe you find a card, or maybe you stole a card, and you're adding it on your device. So this is why there's something called a yellow flow, and it results to something called step up. Step up means there's a block somewhere. I need to have another authentication layer to make sure that you are the owner of that card. There's something called also the orange flow. So orange flow happens basically with MADA Pay and Apple Pay if they're suspicious. So they do a downgrade of the user experience. If it was, you know, a green, you know the user, but I'm suspicious about it, I degrade it to, we're going to discuss more, to the yellow flow. Or if you're already in the yellow flow, I'm going to degrade the experience to something specific. So again, orange is that I'm suspicious, I want to make it a downgrade. So green flow is pass along, everything's happy, you don't have any degradation in user experience, no step up. Step up, there are 4 options, and you will get them if you're trying to add your card on Apple Pay or MetaPay. Some cases you might either have 3 or 4 options, depending on what your bank is providing. There's an OTP, one-time password, via SMS. So you're adding a card. This card, this request is going, eventually, if you remember the previous. So here, you're adding a card on Apple Pay, let's say. It's going to DTR, it's sending to, let's say it's a Visa card. VTS is sending this to the ITSP. So the ITSP, depending on the bin range of the card, and it's reaching the issuer. So the OTP, the issuer knows the PAN, knows that this is Ramzi's card. And Ramzi's phone number on the file for this card is this number. So I send him an OTP, a one-time password. Or if Ramzi has selected an email selection, I will send the OTP via email. This is a good option if I'm traveling abroad and I'm adding the card there. I might not have access to my SMS, so email is a good option. A third option is a callback from the bank. So if I select callback, I wait until the bank calls me. And, hello Ramzi, are you trying? Verify your name, blah, blah, blah. Okay, good. I'll proceed with the tokenization of your card. And the fourth option, which is available only on Apple Pay, it's in-app verification. So this is the best user experience of all 3, where if you select it, it opens your mobile banking app or your wallet, and you authenticate that. So it matches the card with your authentication. Yes, based on your username and password, this is your card, you're authenticated, proceed with the tokenization. So all of these are step-up options with the yellow flow. What about the orange flow? So orange flow, if you remember, is a degradation, right? The first option here, it was a green flow, so no step up. Now you have a step up. If I'm just suspicious for a reason or another, I will have to choose one of these instead of accepting it without anything. If I'm already a yellow flow and still it's suspicious, I'll be degraded to only callback, which is the worst user experience, because I will have to wait until the banks calls me. So this is the orange flow. Now this is a bit too technical. I'm not going to go into details, but just showing that. So there's the app, the TRTSP, the network scheme, and the issuing bank. Network scheme, if you remember, is payment scheme, Visa, MasterCard, Mada. As part of provisioning the card or tokenizing the card, there are a few steps that are happening, which is related to the certificate as part of the security. And so you register the device. Remember, each token is specific to a device. So you're sending the device info, the unique info of the device, and it's saved with the payment network, VTS or MDES. They're checking eligibility. So maybe not everybody is eligible, or not all cards are eligible for tokenization. So this is something that the issuer is deciding upon it. Once everything is okay, you send a digitized request. And this is the OTP, request activation code. So this is the issuing bank, sends the activation code, the OTP, and the user enters the OTP, and the tokenization or the token gets activated and gets saved on the application. So At the end of the day, once you tap and pay, it's the token that is being sent. And we're going to discuss this next. So paying with the token or tap to pay. This is the wallet. After you tokenized your card, your token is saved. So when you tap and you check the receipt, you will see the last 4 digits. This is the last 4 digits of the token, not of the card, right? Because the card number doesn't get saved on the device. So when you tap, it's sent to the point of sale, the merchant sends it to acquirer, the acquirer sends it to the payment scheme or payment network. They know this is a token, so they talk with their internal token service, the SP. They detokenize. So the VisaNet, which is the network of Visa, doesn't know this card is for whom. They know that this is a token. So the mapping is always here. So they send a request, please detokenize this card. Once they detokenize, it sends it back the PAN, the card number. Once it has the PAN number, okay, this is for this bank. So I send it for this issuer. The issuer knows the PAN. They approve or reject based on the previous discussion and sends it back. So this is another flow. I do an NFC tap. A token is sent to the point of sale. It's an ISO EMV transaction. It's as if it's a card. They send the token to the card network. The card network is doing the detokenization, and they send the PAN to the issuer. They perform the payment and send back the transaction. So I just want to mention here one more thing, is that, so now I have 2 tokens for a debit card on my device, whether it's Apple Pay or MetaPay. If I tap on a point of sale, so by the way, this tapping is not just one request. Technically, there are communication that is happening. So NFC is near field communication. When you tap, actually there are maybe 10 back and forth communication. So they're communicating the phone with the point of sale. And as part of this communication, the point of sale is telling the mobile phone, I'm a point of sale in Saudi Arabia, or I'm a point of sale in Bahrain, or I'm a point of sale in London, UK. So once it reveals what point of sale am I, geolocation, the app decides, okay, I should send the local token, the Meta token, or I should send the Visa token or the MasterCard token. Because as part of the regulation, if I'm in KSA, I need to send the Meta token, the local token. If I'm in abroad, I cannot send the Meta token, because if I send it, it will reach the acquirer. The acquirer will see, okay, it's a Visa card. It will send it to the network scheme, but the network scheme doesn't have the mapping, because it's a debit token, it's a local token, and only Meta knows the mapping. So this is why it's very crucial. Depending on the point of sale, I pass on the international token or the domestic token. We have 2 points to cover, so we're almost done. So maybe also you've heard about Apple Pay in-app provisioning. As part of adding your card on Apple Pay, you can do that directly. I open Apple Pay, I add my card. There's the step up, because Apple Pay is not sure if I'm the owner of that card. Another option, which is a smoother user experience, is from my mobile banking app or from my digital wallet, I click on Add to Apple Pay Wallet. Add to Apple Wallet. This triggers a process called in-app provisioning. All these screens are provided by Apple Pay. And basically what's happening, I'm sending the information to Apple Pay, and Apple Pay is taking this information and talking with or communicating with VTS and MDES and MADA to tokenize the card. So how this process happens? From the mobile application, I have a push provisioning assistant or PPA where it takes the card details and encrypt it. And something called like a payload gets encrypted. And this encrypted payload is sent to Apple Pay. Apple Pay has its own TRTSP, which is connected to the TSPs. Same thing, if it's a credit card, it only sends it to MDES or VTS, depending if it's a Visa or MasterCard card. If it's a debit card, it's doing it twice. Once with Visa or MasterCard, the other one with MADA. So a sequence diagram that talks about how you initiate the SDK, you initiate the provisioning process, you get a certificate that you use to encrypt the payload. And once the payload is encrypted, you send it to Apple Pay, and Apple Pay starts with the tokenization process or provisioning process from its end. Apple Pay in-app verification. Remember, one of the options of the step-up was the verification through in-app provisioning. It's a very similar process where from Apple Pay, I select in-app provisioning. It opens the mobile banking app. I verify my account, and then it continues with the same process as the push provisioning. So notice this part is actually the same thing. The last point is the tokenization on the merchants, like Netflix, Amazon. So you notice in those merchants, you add your card once, and then it automatically performs the transactions on a monthly basis without you having to add the cards again. Previously, they used to save the cards. It's called card on file or COF. Now, they don't just add the card, they tokenize the card and save the token instead. And every month, they pay using the token. So it's not an NFC payment, or contactless near-field communication. It's over the internet or e-commerce. Also, the benefits about this, because these are saved somewhere, right? Usually in a PCI DSS certified environment. If somehow it was hacked, the tokens are hacked, not the real cards. So they can automatically delete those tokens or suspend those tokens, and your card is still safe. You can still use it. Any questions? Thank you very much.
السلام عليكم. مساكم الله بالخير جميعا. We're gonna make this quick and easy, inshallah. Okay. So in this session, we're going to talk about managing infrastructure with code to solve modern fintech challenges. It will be a little bit more technical, so bear with me, inshallah. My name is Mohammed Al-Yusuf. I'm a cloud solution architect at D360 Bank. I have been applying the DevSecOps practices for the past 10 years. I have been in the fintech industry for the past 8 years, mainly in the B2B, B2C lending, insurance, and digital banking. You can find me on LinkedIn if you scan this QR code, and you can add me on LinkedIn. I'll be happy to answer all your questions going forward, inshallah. So the state of fintech. In the last 5 years, there has been a rapid growth within fintech in Saudi. The main drivers of this rapid growth is mainly our vision 2030 and the government initiative to empower and promote financial inclusion and digital transformation. The high penetration of smartphones within the population and the tech-savvy population within Saudi Arabia with the young generation, and also the growing demand on accessible financial services within Saudi. Of course, the regulatory reform, creating supportive environment for our fintech innovation. This is why we see in the past few years we have seen a lot of great products and services within Saudi, within the fintech sector. So going forward and the future outlook of what's going on, it's going to be more continued rapid growth within the fintech industry. Will increase the adoption of financial services and digital financial services across all segments, B2B, B2C, and maybe also C2C technologies and services. Also, the collaboration between the fintech companies and banks is going to increase, will include a lot of new products and services within the market, especially with initiatives like open banking that will open up more products and services within the industry. So what are some of the challenges, the technical challenges that we see in the fintech industry as we see it today? Mainly within the infrastructure area. So mainly we have the scalability and elasticity issue within the industry, or the infrastructure management in general. The sudden spikes of customer demands, customer demands and processing data. The traditional infrastructure is not easy to quickly expand and on demand expand whenever we need to accommodate for these high demands. The need for also automatically being able to scale up and down within your infrastructure. Within the regulatory and compliance, there is a lot of strict regulations and governing the data privacy, security, and the financial transaction. The need to meet your infrastructure compliance requirements. You have your PCI, you have your SAMA cybersecurity framework that you have to adhere to, and all of this combined, you will have a very complex auditing and reporting requirement when it comes to the end of showing up your compliance with the industry. This all affects your agility and innovation when it comes to services and products that you are going to deploy within your portfolio. The rapidly changing market needs and the customer needs is a huge issue that you need to have a quick way to deploy and develop new services to meet with these challenges. And traditional infrastructure often is not capable of expanding, and it's cumbersome to manage when it comes to supporting your agile requirements. And of course, customer cost optimization. You need to avoid overscaling or over provisioning or under provisioning your infrastructure. But at the same time, you need to optimize your scale for your reliability and performance requirements. So what is infrastructure as code? Infrastructure as code, or IAC, is the practice of managing your infrastructure. That is your servers, your services, networking, and storage using code and scripts. This means that you avoid to manually go into a portal or a web interface for your cloud provider or your infrastructure provider to create your own resources. What you need to do is define whatever you need your infrastructure to be and declare it within code, and a system will take up this code that you have written and spin up or provision your infrastructure and manage it for you going forward. So what are some of the benefits of using infrastructure as code? Infrastructure as code will increase the consistency and repeatability of your infrastructure. So, for example, you need to expand your infrastructure to different cloud providers. You need to expand your infrastructure to different regions and different areas. With infrastructure as code, you'll be able to do such a thing because it will be easy to repeat your infrastructure and in a repeatable and consistent way. It will improve the collaboration and visibility between the people who are provisioning the infrastructure, the people who are using the infrastructure, and the people who are managing and operating your infrastructure. This will, all of this will reduce the risk of errors and configuration drift within your infrastructure, which will have more reliable infrastructure deployments in a faster manner. And it will also simplify your scaling and your cost optimization. So how can we use infrastructure as code to manage these challenges that we have discussed before? Today, we're going to focus on 4 points when it comes to managing your infrastructure with code. Mainly the cloud providers, the service orchestration, the GitOps concepts, and the secret management aspect. So when it comes to cloud provider provide you with infrastructure as code, platform as code, and software as a service. Software as a service, platform as a service, and infrastructure as a service. All of these things will be provided to you by your cloud provider. What will happen when you use a cloud provider is within your regulatory compliance, these cloud providers go through a rigorous compliance auditing, so that will alleviate your compliance like management overhead of your infrastructure. It will provide you, will leverage you with scalability. Whenever you need infrastructure, it is there for you to expand and to deploy. Taking advantage of cloud-native tools and services will help you in alleviating any pain points on managing like databases and managed services within your cloud provider. Within the cloud provider, each cloud provider provides their own APIs to use and to provision your infrastructure within that cloud provider. You can use your infrastructure, you can use your command line, you can use your REST API, and your infrastructure as tool that they provide as a service. So in order to utilize these cloud services or cloud providers, SDKs and APIs, you have tools like Terraform, which can help you in managing your infrastructure and deploying your infrastructure in a reliable manner. Terraform is a source available infrastructure as code tool. So what you can do with Terraform is you can use a declarative code describing what your infrastructure that you want to deploy within a cloud provider. And Terraform will be utilizing the APIs and SDKs of such a cloud provider to deploy all your networking servers, services for you as a code. It also can expand to more than cloud providers. It supports multiple cloud providers. It supports multiple services. So effectively, you can use it to deploy your infrastructure, create your services, manage your services, and also go up to creating the users and the AD implementations of your infrastructure. It enables you to also to codify and enforce your compliance as code. So you can codify your compliance requirements within Terraform, and it will actualize it for you. So for example, if you are adhering to security benchmark like CIS benchmark, you will be able to codify that within Terraform, and it will prevent any resources that violates these security standards that you have set within Terraform. There's a lot of cloud native and tools and services that you can utilize. They come as by default with infrastructure as code capabilities, especially if you are deploying to something like Kubernetes and utilizing your GitOps concepts. Also leveraging the services that comes with the cloud provider, like your RDS and SQL Server as a service from the cloud provider. It will leverage the cloud provider and remove the overhead and management overhead of managing such services within your infrastructure, and leave you to focus more on your business needs and business requirements that you need to develop. These are some of the CNCF landscape tools that, as you can see, there's a huge number of services. The vast majority of them, they support infrastructure as code. So you can, and GitOps concept, which you can use to deploy any number of your complex environments within your infrastructure and manage it within the code that you have written. Talking about Kubernetes is de facto tools for as a container platform. It's a container orchestration platform. It's becoming the de facto. You can leverage Kubernetes to enable you for reliable and flexible deployment for your application within multiple environments. It simplifies your application management and provides high availability. There is an asterisk on simplify because Terraform is very hard to master. So you will have to go through a lot of things to master Kubernetes, but it will simplify your high availability requirements going forward. You can leverage things like CRDs and operators within Kubernetes to deploy complex applications and complex platforms like databases, where it will automatically updates the databases for you. It will manage and monitor your databases and alerting for it as well. The backups will be leveraged within Kubernetes itself, so you don't have to manage all of these individually. These custom resource definitions and operators can help you in deploying these complex workloads. As I said, like databases, Elastic Stack, for example, and my personal favorite, managing Kafka within Kubernetes. GitOps concept, everyone is using Git right now, so either you're on GitHub, GitLab, or something like that. So all of your code is within Git. So GitOps concept leverages that everyone is using Git and infrastructure as code and codifying everything within your infrastructure within Git. So you will have your end-to-end from infrastructure to deployments to the services within your Git repositories. In that, you will have consistent and traceability of infrastructure changes. Whenever something changes, you know who changed it, when, and how it got changed. It will enable the collaborative development between the people who are managing the infrastructure, deploying the infrastructure, and using the infrastructure. There are tools to apply your GitOps methods, especially like Argo CD, which is a Kubernetes continuous delivery tool, an application that will automate the deployments, rollbacks, and canary deployments of your infrastructure. Finally, managing secrets. Secret management is very hard. So one of the de facto tools is HashiCorp Vault to manage your secrets, your KPIs, your PKIs, and you can leverage high availability, high enforcement of your access control, and provide containerized audit and centralized auditing within your infrastructure. So with all of that, what you will have within your agility and innovation is fast deployment cycles, improve the collaboration across the board in your organization, reduce the risk of errors, simplify your infrastructure, and improve infrastructure resilience within your organization. Some tips for implementing your infrastructure as code in a fintech. Start small and scale gradually. Don't start by trying to automate all of your infrastructure A to Z within the first day. Go gradually on your journey and build a strong foundation with tools and processes going forward to implement this on a whole scale of your organization. Focus on automation. Using open source tools will help you a lot. There's a lot of community content online around open source tools, so you can leverage that. Security first, and try to shift left as much as possible and check the security violations or security posture as early as possible. Get a buy-in from stakeholders. Managing the infrastructure with code takes a long time or a lead time to actualize. So you need your stakeholders' buy-in to convince them with the benefits of using infrastructure as code. So get your buy-in from the stakeholders for the lead time until you actualize the benefits of using infrastructure as code. Monitor and measure and learn more from others. Thank you. Any questions? Go ahead.
Thank you. It was a very good comprehensive presentation. Thank you very much. Very nice presentation. You mentioned Kubernetes as part of your suggestions or presentation, but how would you say what's the currently in the industry? What's the support level for Kubernetes across the software? Have you used or seen any software which is not yet Kubernetes friendly, or is it already a safe bet and everyone can go by default with Kubernetes?
It's hard. It depends on the solution. There are a lot of solutions that still does not support Kubernetes. They have special requirements, special requirements and configurations that are still not within Kubernetes. So if in general, if the solution is not container friendly, it will be very hard to fit it within Kubernetes. So the best way is to start with something that is container friendly, or try to containerize and improve on the services that you are using to be more container friendly to be used within Kubernetes. But it's, as I said, it's the de facto orchestration management tool in the market. So there's a lot of support on Kubernetes, and everyone is moving towards supporting Kubernetes going forward. Any more questions? Thank you so much.
السلام عليكم، يعطيكم العافية. معكم مشعل عامري. أنا Product Development Manager. I've been in the financial industry for 18 years now. I've worked in a lot of areas, from branches in the bank, from ATMs, ITMs, point of sale, self-service kiosk, digital marketplace, and the digital wallets now. So today we're talking about how to basically finding the balance and the success of a product, where the balance lies. There's a lot of aspects that we need to presentation. في مشكلة في البرزنتيشن؟ بس الألوان أوكي لأنه الخط مو باين. One minute. Sorry for that. So let's go back to the presentation. Slide. Okay, so patient, sorry about that. So there's a couple of aspects that we need to tweak to reach a balanced offering or balanced product. We're talking about innovation, unique value proposition, cost and affordability, usability and support, the ecosystem and integration, the evolution of the product from one stage to the next. It needs to all to be balanced in a way that we can offer the right service at the right time. So we'll talk about a couple of aspects and the balancing between those aspects and some examples that show where this balance might fail or win in favor of one product to another. So let's talk about new technology and innovation. Now, a lot of people don't see the difference between a new technology and innovation. Now, these are two different aspects. A lot of companies or startups start with the new technology and forget the innovation behind the new technology. And this is where they fail. A good example of this is the Bluetooth. Bluetooth was introduced in 1999. Around that time. Now, what's the difference between Bluetooth and AirDrop? It's the innovation behind that system. It's being able to utilize the Bluetooth and the Wi-Fi to seamlessly transfer data between two phones and make it very simplified and very easy. Now, this is the difference between finding that balance. If we just focus on just the new technology, it will fail on its own. So we have to find the areas where we can utilize multiple services or multiple units of technology to reach that balance. Regulatory compliance and skirting the rules. I know our hosts here will be very upset with me when I talk about this, but this is a fact of our industry. We need to really find where we skirt the rules and where we have to comply with the rules as they are stated. This comes with the experience of being in the market and exploring the services and knowing closely working with the regulator, understanding where are the clear-cut red lines for these rules and regulations, and where we can just go and say, okay, we can just put another, let's say, layer of protection on this area, or have some other mitigating factor to enhance the service and reach that desirable, let's say, equilibrium or balance in the service. Usability and complex and the ever-elusive balance between the two. Now, I understand that there's a lot of people that would prefer a much more usable or much more simplified UI. However, some cases argue for the more complex, let's say, services. Now, finding where your product should be is a very tricky situation. Let's take Snapchat as an example. Snapchat, when it first started, it was very, very usable and very, very easy to use. It was just 2 buttons and that's it. Later on, when their customer base started to expand and get more complex, they had to add more features, more complexity into their product to reach that market, or their segment. So here the usability comes at the price of functionality. So here we need to understand where is the balance, where we need to be focused, what's our target market, and how we can basically reach those segments without hindering our product. Another aspect is going for a general market or a niche market. again, this is another balancing act that we need to take as product developers or product owners to understand where we need to focus on. Should we focus on a very specific group, or just make it very public and just target everyone? When I think about this, I always think about the red ocean and blue ocean tactics. If your product is touching in a red ocean, it should be definitely targeted to a very niche segment or a very niche, let's say, usability case. If it's in a blue ocean, you can go and generalize in that blue ocean and capitalize on that market and try to get as many customers or customer base in that ocean before other players come and compete with you on that end. Now, another aspect is the ecosystem versus a standalone system. A lot of people would say this is a clear-cut, let's say, decision. Okay, it's always ecosystem, but that's not always the case. Now, for example, a lot of people would think Apple as a perfect example for an ecosystem. It's not. It's a standalone product. It is creating its own ecosystem or bubble within its system, so you are hooked with them. But it's not an ecosystem as the concept of an ecosystem. Ecosystem is more of what Microsoft is trying to do, is trying to get everybody, including the Apple users, on board to utilize their products. And this is where we need to understand what ecosystem means. It means inclusivity with other players or other services within the industry. It's not just saying, well, because I'm a fintech, I'm just going to be a standalone service and I'll forget the banks. No, it needs to be including the banks, including the other fintechs, and trying to get that ecosystem to a place where I don't sacrifice my uniqueness within the ecosystem and not be another player in the bigger red ocean. And one of the most trickiest subjects and very touchy subjects is consultancy versus in-house. I know a lot of people, especially the top management, always go leaning towards consultancy, and they forget their in-house, let's say, talent and in-house capabilities. And this is where I would like to talk more about this, let's say, emergent trend in the market, and we need to fight it with understanding that consultancy is a tool, it's not a means to an end. How do we utilize them as a tool? We utilize them in the aspect they're meant to be utilized in advising us in the specific aspects of the product, not building our products. And this is where a lot of, let's say, newer players in the market fail, because they completely rely on that consultancy arm. And when that consultancy contract ends, their progress ends. And they have to either re-engage another consultancy with another different mindset, or be the slave of that consultancy until they go out of business. As Thomas Edison said, there's a way to do it better. Find it. Thank you. Any questions? Want to make this very short and more interactive, so please, if you have any questions, feel free. Seems no questions. Thank you.